Welcome to How to Spend It, your premier destination for detailed aircraft reviews. From specs to ownership costs, we've got your flight interests covered. Let's soar into today's review. The Pilatus PC-24 is often described as the super versatile jet due to its unique ability to land on rough airstrips, offering both jet performance and turboprop versatility. But what is the real cost of owning this unique aircraft? Let's delve into the financial details and nuances to get a clearer picture. When evaluating a potential investment in an aircraft, one of the first considerations is the initial purchase price. The Pilatus PC-24, revered for its unique capabilities, bridging the gap between a turboprop and a light jet, comes with its own set of financial particulars. As of the most recent figures available, a brand new Pilatus PC-24 has a list price starting at approximately $10.7 million. Yet, this foundational figure is just the tip of the iceberg. Tailored choices and additions can elevate this sum. Depending on individual preferences, the PC-24 can be configured in various interior layouts. An executive 6-seater arrangement, for instance, could add another $200,000, while a 10-seater commuter design might bring an additional $350,000. Opting for luxury finishes, modern infotainment systems, or unique branding can push the costs upwards by $500,000 or more. Beyond the basic configuration, Pilatus offers numerous optional enhancements. Advanced avionics systems might contribute another $100,000, while cutting-edge vision systems or external lighting packages could each add $50,000 to $75,000. Astute negotiation can lead to price reductions. It's not uncommon for volume purchases or long-standing relationships to result in discounts of 5% or more off the list price. Depending on the timing, promotional offers might further trim the final price. Within the PC-24's category, aircraft prices can span a wide range. By benchmarking the PC-24's price against its peers, potential buyers can ensure they're making an informed investment. Comparable aircraft might range in price from $9 to $12 million, depending on their specifications. The second-hand market offers another avenue to own a PC-24. Depending on factors like age, flight hours, and maintenance history, a used PC-24 can range from $8.5 to $10.5 million. In sum, while the Pilatus PC-24's starting price gives a preliminary understanding, diving deeper into configurations, upgrades, and market comparisons is essential to paint the full financial picture. Choosing to finance an aircraft, like the Pilatus PC-24, instead of purchasing it outright, can offer flexibility and potential tax advantages, depending on the individual or company's financial situation. But to make an informed decision, one must understand the financial implications of such a commitment. Typically, financial institutions require a down payment for aircraft financing. For a Pilatus PC-24, which has a base price of around $10.7 million, lenders generally require a 15 to 20% down payment. This translates to an initial outlay of $1.6 million to $2.14 million. Interest rates can significantly influence the overall cost of the aircraft over the term of the loan. As of recent market figures, rates for aircraft loans hover between 3 and 6% for a loan amount of, say, $9 million. After a 20% down payment at an interest rate of 4.5% over 15 years, the total interest paid would be approximately $3.2 million. The duration of the loan also plays a crucial role in determining monthly payments and overall interest. Common loan terms range from 5 to 20 years. Shorter terms mean higher monthly payments but lower total interest, and vice versa. Many lenders require borrowers to carry comprehensive insurance on the aircraft, which protects both the owner and the lender's interests. Premiums vary based on coverage, but a ballpark figure for a Pilatus PC-24 might be $25,000 to $35,000 annually. Some lenders charge fees for processing the loan, which can range from 0.5 to 1.5% of the loan amount, translating to $45,000 to $135,000 on a $9 million loan. It's essential to check for any penalties associated with paying off the loan early. These can range from 1 to 3% of the remaining balance, depending on the lender and loan agreement. Financing can offer potential tax advantages, especially if the aircraft is used for business purposes. Interest on the loan might be deductible, and there may be benefits related to depreciation. It's always wise to consult with a tax professional to understand these nuances. Some financing deals come with an RVG, where the financier assures a minimum future value for the aircraft at the end of the loan term. While this can be beneficial for the borrower, it might come with slightly higher interest rates. Alternatively, potential owners might consider a lease, which can reduce monthly payments and offer different tax implications. Lease rates can vary widely based on the terms and conditions of the agreement. In conclusion, while the sticker price of the Pilatus PC-24 gives a snapshot of its cost, the nuances of financing can add layers of complexity. It's vital to scrutinize the fine print, understand all associated costs, and consider the long-term implications before committing to a financing plan. Fixed costs are the ongoing expenses an aircraft owner will incur, regardless of how much the aircraft is flown. Understanding these fixed costs is essential to determine the true expense of owning a Pilatus PC-24. Here's a breakdown. Storing an aircraft safely is crucial. Depending on the location and type of storage, shared hangar, private hangar, tarmac tie-down, hangar fees can vary. At major metropolitan airports, a PC-24 owner might expect to pay anywhere from $5,000 to $12,000 per month. Comprehensive insurance is a must for an asset as valuable as a Pilatus PC-24. Aircraft insurance can cover liability, hull damage, medical payments, and more. For a PC-24, annual premiums typically range between $20,000 and $30,000, depending on factors like the owner's flying experience, aircraft use, and coverage limits. If you don't fly the aircraft yourself, you'll need a professional crew. A qualified pilot for a Pilatus PC-24 can command an annual salary between $100,000 and $150,000, while a co-pilot might earn between $60,000 and $90,000. Regardless of flight hours, certain annual checks and inspections are mandatory. For a PC-24, a typical annual inspection can cost between $20,000 and $40,000. These include databases for avionics, weather services, and flight planning tools. Depending on the level of service and providers, these can run between $1,000 and $5,000 annually for a PC-24. Depending on your jurisdiction, you may incur annual property taxes on the aircraft, and there are often licensing and registration fees. For a PC-24, this might range from $10,000 to $30,000 annually, depending on the jurisdiction. Some owners opt to have their aircraft managed by a third party, which can streamline operations, but at a cost. Management fees for a PC-24 can vary but might be in the ballpark of $5,000 to $10,000 per month. Though not an out-of-pocket cost, it's vital to account for the depreciation of the aircraft. Over the first 5 years, a new PC-24 might see depreciation of 20 to 30% of its initial purchase value. If you financed your purchase, you'll have monthly loan payments. While the exact amount will depend on the terms of your financing, a PC-24 owner might see monthly payments ranging from $50,000 to $100,000, depending on down payment, interest rates, and loan duration. By adding up these fixed costs, it's clear that owning a Pilatus PC-24 involves significant ongoing expenses beyond the initial purchase price. It's essential for potential owners to be fully aware of these costs when budgeting for aircraft ownership. Variable costs fluctuate based on usage, and for aircraft ownership, these costs mainly arise when the plane is in operation. The Pilatus PC-24, while efficient in its class, does come with several operational expenses. Here's a breakdown. The PC-24 burns approximately 90 to 100 gallons of fuel per hour in typical operations, with jet fuel prices ranging from $4 to $7 per gallon at many airports. Prices can fluctuate based on location and global oil prices. Operating the PC-24 might cost between $360 and $700 per hour just for fuel. Beyond annual inspections, maintenance is directly tied to flight hours, including parts and labor. Owners can expect costs of $300 to $500 per flight hour for the PC-24. This accounts for routine wear and tear and scheduled parts replacements. Setting aside money for engine overhauls is wise, at an estimated $250 to $400 per flight hour. This ensures that when the time comes for an engine overhaul or major repair, the funds are already set aside. Similar to engine reserves, a provision for parts replacement is essential. For the PC-24, a good estimate might be $100 to $200 per flight hour, covering everything from avionics components to airframe parts. Depending on where you fly, airports charge fees for landing and using their facilities. At a major metropolitan airport, landing fees for a PC-24 might be anywhere from $100 to $500 per landing, while ramp fees can be $50 to $250 per day. For longer trips, you'll need to consider crew accommodations and per diems. Overnight stays, meals, and other daily expenses for a crew can range from $200 to $500 per day, depending on the location. If you're providing meals and other amenities for passengers, costs can range widely based on the quality and quantity of services, but budgeting $50 to $200 per passenger is a good ballpark. When flying internationally or using certain airspaces, there are fees associated. For a typical international flight in a PC-24, fees might range from $500 to $2,000. Keeping the PC-24 pristine is crucial for passenger comfort and maintaining the aircraft's value. Regular cleaning might cost between $100 to $500 per session, depending on the depth of detailing. Whether arranging a car rental or shuttle service, or perhaps a concierge service at your destination, these additional amenities can range from $50 to several $100s per trip. Given the above costs, it becomes evident that while the Pilatus PC-24 is a marvel of modern aviation design, its operation comes with considerable variable costs. Proper budgeting and understanding of these expenses are critical for prospective and current owners. When owning an aircraft like the Pilatus PC-24, enhancing its features or maintaining its cutting-edge capabilities over the years might necessitate upgrades and retrofits. These adjustments can range from minor modifications to significant overhauls. Here's a deeper dive into the potential costs associated. As technology evolves, avionics suites may need upgrades to remain current or to add new capabilities. For the PC-24, updating the avionics can cost anywhere from $50,000 to $250,000, depending on the extent of the upgrade. To keep the interior looking fresh and modern, or to adapt to changing preferences, owners might opt for cabin refits. This can include new seating, lighting, or entertainment systems. Such refurbishments can range from $100,000 to $500,000. Upgrading in-flight connectivity systems, like adding faster Wi-Fi or satellite communications, can fall between $30,000 and $200,000, depending on the system's capability and coverage. While the PC-24's engines are robust, there may be performance enhancement kits or noise reduction modifications available in the future. Such upgrades can cost between $100,000 to $500,000. To maintain a fresh look or to update branding, an exterior repaint might be required every few years. For an aircraft like the PC-24, professional repainting can range from $50,000 to $150,000. Regulatory changes might necessitate specific upgrades to comply with new safety standards. Depending on the nature of the regulation, these upgrades can cost between $10,000 and $100,000. Adding or upgrading EVS capabilities can improve safety for nighttime or low-visibility operations. Such systems can cost between $100,000 to $300,000. Over the life of the aircraft, the landing gear will need overhauls, depending on wear and tear. Such overhauls for the PC-24 can range from $50,000 to $200,000. To comply with noise regulations or for operations from airports with strict noise abatement policies, noise reduction modifications may be needed. These can vary greatly in price, from $20,000 to $100,000. For extended range operations, owners might consider adding auxiliary fuel tanks. For the PC-24, adding such tanks can cost between $100,000 to $300,000. Owning an aircraft like the Pilatus PC-24 is a significant investment, and maintaining its top-tier status or customizing it to specific needs often involves further financial commitments. Understanding the potential costs of upgrades and retrofits is crucial for long-term budgeting and ensuring that the aircraft remains a valuable asset. Depreciation plays a crucial role in the economics of owning a Pilatus PC-24. Like any asset, an aircraft's value will diminish over time due to a variety of factors. Understanding how depreciation affects the PC-24 can offer insights into its long-term cost implications. Historically, the most significant depreciation of a new aircraft occurs within the first year of ownership. For the Pilatus PC-24, the first-year depreciation can range between 10% to 15%, translating to a potential drop of $1 to $1.5 million from its purchase price. After the first year, the rate of depreciation tends to stabilize. The PC-24 may see an annual depreciation rate of 4 to 6% of its initial value in the subsequent years. For a $10 million aircraft, this represents a decline of $400,000 to $600,000 annually. Well-maintained aircraft tend to depreciate at a slower pace. Regular maintenance, timely upgrades, and cabin refurbishments can reduce the annual depreciation rate. Conversely, neglecting these aspects can hasten the aircraft's value decline. Macroeconomic conditions also influence depreciation. During economic downturns, the demand for private jets may decline, leading to steeper depreciation rates. Conversely, in booming economies, the rates might stabilize or even decline. The availability of newer models or an influx of used PC-24s in the market can affect its resale value. A saturated market typically results in higher depreciation rates due to increased competition in resales. The number of hours flown annually can significantly influence depreciation. A Pilatus PC-24 flying 300 hours annually might depreciate faster than one flying only 100 hours, given the increased wear and tear. In many jurisdictions, aircraft depreciation can be used as a deductible expense, offering tax advantages. Current tax codes might allow for accelerated depreciation over a shorter time frame, which can provide significant upfront tax benefits. After 20 to 25 years, while the PC-24 might still be operational, its value could drop to 10 to 20% of its original price, given the advancements in newer aircraft models and potential obsolescence of older technologies. In conclusion, while the Pilatus PC-24 is a top-tier aircraft boasting performance and luxury, it's essential for potential owners to understand the depreciation dynamics. Factoring in depreciation can offer a holistic view of the real costs associated with owning this aircraft over its lifespan. Resale value is an essential consideration for any aircraft owner, especially in the realm of private jets, where market dynamics can significantly influence an asset's value. The Pilatus PC-24, with its unique features and performance capabilities, has its own set of factors affecting its resale value. Here's a closer look. As previously mentioned, aircraft typically experience their steepest depreciation in the first year. A brand new Pilatus PC-24, priced at around $10 million, could see a reduction in value by $1 million to $1.5 million within the first year. Historically, after 5 years, a Pilatus PC-24 may retain approximately 70 to 80% of its initial value, assuming optimal maintenance and average flight hours. This translates to a resale value ranging between $7 to $8 million. By the 10-year mark, given technological advancements and the release of newer models, a PC-24 might command a resale value of 50 to 60% of its initial price, placing it in the ballpark of $5 to $6 million. The Pilatus PC-24's versatility and ability to land on unpaved runways make it highly sought after. However, a surge in available used PC-24s or the introduction of newer competitive models can suppress its resale value. Aircraft that have been meticulously maintained, with full documentation and timely upgrades, generally command higher resale values. For instance, a PC-24 with a recently refurbished interior or upgraded avionics might fetch an additional $200,000 to $500,000. Broader economic conditions significantly influence resale values. During a booming economy, luxury assets like private jets may see strengthened resale prices. Conversely, during downturns, values can be suppressed. A Pilatus PC-24 with lower than average flight hours will typically have a higher resale value. For every 100 hours below the average annual flight time, the jet might see a price premium of $50,000 to $100,000. If the aircraft is being sold while still under parts of its manufacturer's warranty, this can bolster its resale value, potentially adding a premium of $100,000 to $250,000. In summation, while the Pilatus PC-24 is recognized for its distinctive capabilities and is highly regarded in the private jet market, various factors interplay to determine its resale value. Prospective buyers and sellers should stay updated with market trends, perform detailed valuations, and seek expert advice to navigate the complexities of aircraft resale dynamics. Owning an aircraft like the Pilatus PC-24 offers not only operational advantages but also potential tax benefits. However, these advantages depend largely on how the aircraft is used, where it's based, and the local and international tax laws. Let's delve deeper into some of the potential tax considerations and benefits. Businesses can depreciate an airplane over a period of 5 years. For a $10 million Pilatus PC-24, this could result in a yearly tax deduction ranging from $1.5 to $3 million over the first 5 years of ownership, depending on the specifics of the depreciation schedule. Recent tax laws like the Tax Cuts and Jobs Act have allowed for 100% bonus depreciation on aircraft, meaning a business could potentially write off the entire cost of a new or pre-owned aircraft in the year of purchase. Depending on the state in which the aircraft is purchased and based, owners might be subject to a sales or use tax. For instance, buying a PC-24 in a state with a 6% sales tax could lead to an additional $600,000 cost. However, some states offer exemptions or reduced rates for aircraft used in specific commercial capacities. Business-related aircraft expenses, such as fuel, which can cost around $4 to $6 per gallon for jet fuel, maintenance, pilot salaries, and hangar fees, can be deducted from taxable income. For an aircraft like the PC-24, this could translate to potential yearly deductions of $500,000 to $1 million or more, depending on usage. In some European countries, purchasing an aircraft can attract VAT. For a Pilatus PC-24 priced at $10 million, a standard VAT rate of 20% can mean an additional $2 million in costs. However, VAT can be reclaimed or reduced in some scenarios, especially when the aircraft is used for charter or other commercial purposes. U.S. tax code allows for deferment of taxes on gains from the sale of an aircraft if the proceeds are used to purchase another like-kind aircraft. This can be an attractive option for owners looking to upgrade from an older aircraft model to a newer one like the PC-24. Creating an LLC or a trust to own the aircraft can offer tax benefits. However, this comes with initial setup costs and ongoing administrative costs, which can range from $1,000 to $10,000 annually, based on complexity. Some jurisdictions offer tax credits for energy-efficient or environmentally friendly aircraft. The Pilatus PC-24, with its advanced design and fuel efficiency, may qualify for such incentives, though these vary by region and policy. It's imperative for potential or current Pilatus PC-24 owners to consult with aviation tax specialists. Given the complexities and ever-changing nature of tax laws, proper planning and structuring can lead to significant savings and a maximization of the financial benefits of aircraft ownership. In conclusion, owning a Pilatus PC-24 comes with notable expenses. Beyond the initial cost of $8.9 to $9.2 million, annual fixed costs can reach $500,000, with variable costs around $1,500 per flight hour. Financing might add $400,000 annually, while upgrades could total $250,000 over the aircraft's life. Though depreciation affects value, a 5-year-old PC-24 can still resell for about $7–8 million. Tax benefits, like depreciation deductions, might offset some expenses, but these vary by jurisdiction. It's essential to consider all costs before purchase.